The Fed is cutting interest rates, and you may think what a great time to refi your mortgage, but not so fast. Before you call your mortgage broker to refinance your mortgage, it's important to understand the difference between the Federal Reserve cutting rates, which is the cost of overnight money, versus mortgage rates, which generally tracks the yield on 10-year treasuries. A good example was 1 year ago in September 2024 when the Federal Reserve began cutting interest rates. At that time, the 30-year mortgage was about 6.2%. But even as the Federal Reserve cut rates 3 times over the next few months, mortgage rates climbed above 7%. So many people were able to refinance their mortgages when rates were low that many people do not stand to even benefit from lower mortgage rates. If your rate is below 6%, you likely would not see any benefit from the current rate environment. But if your rate is above 7%, it may be worth exploring. Just make sure you understand all the costs associated with refinancing, and I would again make sure you don't pay points at this time. If the broker is quoting you a rate in the fives, let's say, that is likely too good to be true, and you are likely paying unnecessary costs. What does benefit from Federal Reserve reduction or the reduction in rates is what is known as HELOCs, which are home equity lines of credit. Rates still remain somewhat high on these products, but with the reduction, it may be tempting to tap that credit line. I always tell people to be careful doing so, because if rates go up again, your interest costs will also rise since it's a variable rate product. It generally makes sense to use these lines to pay off other high interest debt or for home improvement expenses. The big thing here though is you need to remain disciplined and have a plan on how you will repay the credit line. Credit card rates also closely follow the Federal Reserve rates, and while a decline in the APR may be nice, borrowing with a credit card long term should be avoided as the cost of debt will still remain high on these products. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.